Hello, this is Corner Invest. So the stock market is having a bloodbath. Yeah, the bloodbath around 2 days ago. Over here, you can see companies like Microsoft down 3%, Apple, Nvidia down 7%, even Berkshire is down 7% as well on a day like this. And you can barely find any green in the market that was on Friday. So the only green that you're seeing over here is Nike. They had a green day because the Vietnamese, they basically cut all the tariffs for US and they're now having a trade agreement with the US. So is this now time for you to be bullish or bearish on the stock market? So over here, the VIX is at around 45 times. So the VIX basically measures the fear in the market. So when you have a high VIX, basically what it means is that there is peak fear in the market. And so if you're to look at the times where the VIX crossed around above 40 in the past few cases or so, every single time on average, we're supposed to be green from here. So this is sort of like an indicator for you in case you want to look at the VIX. But yeah, if you're to just look at the fear and greed index as well, the fear and greed index is currently at a 4. Even the COVID lows weren't this low. And I think the lowest point in the last few years was in 2022 when we had a fear and greed index of around 3. So if we continue going down on Monday as well, then we could see this going down all the way until 3. But currently, it is in peak fear already. So this is what Howard Marks has to say about the market today, whether or not we should be bullish or we should be bearish on the stock market.
Is lower than ever, and that's how I feel.
Is this a time to be fearful or greedy?
What you have to say, Bloomberg's offices, you have to think in terms of your neighbor. The department store.
Bloomingdale's.
Bloomingdale's just put everything on sale. Prices have come down for the S&P 8% in the last 2 days, and much more in the last 6 weeks. It's on sale. That should encourage people to think about buying. Will they go down further? Nobody knows. Are the prices fair? Nobody knows. But everybody runs from the market when prices go down because they think it connotes risk. It's just stuff going on sale. And of course, it takes, well, I was going to say a pro, but it takes a prescient pro, of which there aren't many, to know whether, as I keep saying, the discounts are adequate or appropriate. But certainly you have to look, and it doesn't make any sense to say, just a minute, I did XYZ when the price was 100. Today the price is 90, so I'm going to boycott it. That doesn't make any sense on its face. You have to take a hard look.
Yeah, so basically what Howard Marks is saying is when your stocks go down, your future expected returns will go up. And so it doesn't make sense for you to be fearful of buying stocks right now, especially if you're buying stocks a few months back. And so just think of your stock as like your grocery as well. So when your grocery prices go down, you should be happy. Same thing over here, when your stock prices go down, you should be happy and not fearful because yeah, just treat it like it's a grocery. Just treat it like you're buying a grocery, and nothing has changed fundamentally in all these different stocks unless we see earnings revision going down and we see a recession coming up soon. But for now, as it is, this sell-off has been manufactured by Trump, and it will continue to be manufactured by Trump until the 9th of April. And that is the D-Day of all these different tariffs that we're having over here. So if you're to just look back at history of the stock market, so let's look back at the past 10 years. So in 2015, we had the European debt crisis. The stock market went down by around 15%. And then over the next few years, it shot up by around 58% to all-time highs. And then after that, in 2018, we had the Trump's tariffs as well. So basically what we're seeing right now, but on a larger scale currently. So in 2018, we had two 10% drops. So we had one that was 12%, and then we had one that was close to a bear market as well. It's around 20% just on time for bear market. And then the year after that, the stock market rallied by more than 30%, and then it went up 40% all the way until all-time highs before we had COVID again, which swept around 35% of the stock market in a matter of around 35 days. And then after that, we had a rally of around 100% as well, all the way to all-time highs in 2021. And then in 2022, we had a bear market, which was down around 27%. And then from the lows of 2022 until the highs of 2024, which is this year, the stock market rallied by around 74%. So just based on history itself, just based on the past 10 years itself, the stock market, every single time we had a drop like this, the recovery will be a lot better, the recovery will be violent as well. Yeah, but of course we could be in sort of like a super trend, meaning to say we could be having years where the stock market is unusually high as compared to historical averages. But yeah, I think stocks going down is a good thing. Stocks going down should be a time for you to buy. Nothing has changed about all these different companies. You're buying companies with, as long as you're buying companies with solid fundamentals, it shouldn't be a problem for their prices to come down. As for what I think Trump is doing, there are two perspectives for this. So one of it is that I think he's trying to force the 10-year yield down. So he's trying to like create some form of recession fears based off of his tariffs, and then force the Fed to cut rates, because the US, they have $9 billion of debt to refinance this year. And if you have this $9 billion of debt to refinance, it will be better. It will save them a lot of money if they can refinance it at a much lower rate as compared to 4% today. So 4% today in the past 10 years is actually a quite high rate. But if you were to look back at the past 20 years, past 30 years or so, it's not an extremely high rate as well. But of course, with the economy today, with the economy operating on your QE and all that, it is considered a relatively high rate already. And there's another perspective as well. So my other perspective is that Trump is trying to make a deal out of this. So if you were to just think about the economy in general, the US GDP, the US GDP is made out of a few things. So you have your consumer, you have your government spending, you have your investments, as well as your net exports. So what he's doing is he's trying to place more tariffs so that your net exports will be positive. And then he is trying to bring in more investments from other countries as well through the tariffs. So by tariffing all these different countries, he will force investments into the US, and that will lead to a rise in the I component of your GDP as well. As for consumer and the government portion, he is actively trying to reduce it. And as for the consumer portion, he will have to make sure that the consumer confidence, the consumer spending remains strong. And as of now, the jobs market is still healthy. The jobs market is not crippling into a recession yet. So I don't expect the consumer spending to go down extremely high unless Trump continues on with all his different radical approaches to tariffs. As for the stocks that I think are undervalued today, you have companies like Amazon. Amazon is quite undervalued today. My fair value for Amazon is around $190. Currently, it's trading at a 30 times earnings. You've never seen Amazon trading at this earnings before. And with so much operating leverage in the business, you have a business that is the greatest revenue business in the entire world, operating at a 2% operating margin. So if you see some form of operating margin increase in those components of the business, this earnings in this company will just explode from here. And for Amazon, I think it is selling off, rightly so, because you have China, and it depends quite heavily on China for all its different stock out of its products. But if you were to just look at Amazon's earnings itself, only 5% of the net income comes from retail. And since 5% of the net income comes from retail, it means that they won't be affected as much unless the AWS portion gets hit as well. So Amazon is a decent buy today. I think it is a company that is trading at a discount to its fair value, and I hope this one goes a lot lower so that I can get a full position on it. The next one that I'm looking at is ASML. So ASML is currently down around is down 13% in the past month alone, 12% year to date, and it is currently trading at a 31 times earnings. Similar to Amazon, this company is an absolute monopoly. So you have ASML that is exempted from tariffs. So Trump, he basically laid out that the semiconductor industry won't be tariffed. And then you have a company that is basically a monopoly in its sector. Basically, the entire world won't be able to function without this company over here, because this company is the only company in the world that is able to produce the machines that will basically do lithography for all your different chips and all that. So for ASML over here, I think it's extremely undervalued, and that's why the stock only went down around 2% on a sell-off like this, because the markets, they acknowledge that ASML is undervalued. So similar to Amazon as well, this stock is one that I'm looking at. Next one is Google. So Google is another company that I think is undervalued as well. The market went down around 6% yesterday. Google went down 3%. This stock over here is currently trading at a 17 times earnings. This is going to meta levels again. We're going to meta levels where meta was around 12 PE in 2022. And yeah, we could see Google going down to that point as well. But rest assured, I'll be buying all the way on the way down. And yeah, I think this company is an asymmetrical bet right now. Next one is S&P Global. So S&P Global over here, it is a company that is in a duopoly with Moody's. And when you have a company that is in a duopoly with Moody's, with a business model that is so elite, there's no reason for this stock to go down as much as the market today, or even more than the markets today. So this company over here is one I'm looking at. I'll be looking to add my next tranche at around $436. Hopefully it gets there on Monday. That will be where I'll be entering heavily into S&P Global as well as Moody's. And then the last company that I'm looking at as well is Microsoft. Microsoft is extremely simple. It's just a super steady business, super stable business that is currently trading at around the 26 times forward earnings. For the stability of Microsoft and for the fundamentals of Microsoft, it grew revenue in 2022 as well as 2020 as well. So this company over here is an extremely stable business that I'm looking to add. Hopefully it goes down as well, and then I'll get a full position in this when it goes to around $320. That'll be where I'll be heavily adding into Microsoft. Been waiting for this one for a while. Hopefully it materializes. Let's see what happens to the markets next week.